right.
Mhm.
Cool. So we'll start in about a minute, but kind of quick introductions just to kind of say hi because there's so many new faces in here. I see only a couple of folks that I recognize, but so we've been doing a lot of these series for a couple weeks. Actually, no, for several years. It's almost been 4 years that we've been doing these webinars and bringing in our friends to teach us about new things, underwriting, anything about real estate. And Perry is a really good friend of ours. He's actually probably one of the smartest people we know in SARE. So he's been teaching us a lot from all about multifamily, and then now he's gone into the software cash flow portal to teach people how to raise capital, and then also for investors to kind of network and learn from each other, and to kind of find good, reputable LPs or GPs to work with. So this is one of the new things that we've been talking about for underwriting because like it's kind of tedious. It takes a whole day to just get through all these numbers. And then it always makes me wonder like how much time the GPs are spending to underwrite these deals, let alone us as LPs to find out like, oh, do these numbers actually make sense? How to understand and read it. And so Perry's been teaching us a lot about that as well. Outside of SARE stuff, he's been kind of mentoring a small group of us who we all met up in Florida over a year ago. So we've been meeting up for almost a year, but just letting us ask questions all about multifamily. So that's why I'm really excited to have him come and teach us. And then also there's a couple of friends in here. There's Ashley. She's in there. Her mic's not working well. She was also one of the students from Linfinity. We have kind of a group of students who've been learning about multifamily together along with Ian. And Ashley fell in love with multifamily so much in commercial, she became also a commercial lender. She works for Old Capital Lending, which their company lends like I remember about 30% of all the commercial loans in Texas. So I'm glad like we have all these really, really smart people in here too. So that's why you guys build this network, meet each other, ask questions. We're really all here to support you guys and share the knowledge. So that's my spiel. But yeah, all right. So without further ado, this is our good friend Perry from Cashflow Portal. Take it away.
Thank you, Annie. Thank you, Nelson. Thank you, everyone. See some familiar faces. Hi, everyone. Let me share my screen. So this will be one of the most boring, but also most interesting presentations I'll ever give. It's gonna be very toned down. It's almost like a lecture style, going through underwriting. So a little bit of my background. I was a software engineer, then became a GP. And I have about 4 syndications as a lead sponsor, raised about 25 million and did a ton of underwritings. I just took a look before this call how many underwritings that my real estate business partner and I did. And this is the DFW area. So if I scroll down, this is how much we did. And then I guess I can select all of them, and the computer froze when I do that. And then just wait for it. And I scroll all the way up. It says 341 selections. So we underwrote 341. But as you can see on the right-hand side, the owner is always my real estate business partner. So I don't do anything. I just review it at the end. But we have underwritten 300 plus deals, or maybe even 400, 500 at this point. And these are thorough underwritings. So needless to say, we have spent countless hours. My first foray into multifamily investing is underwriting. I remember the first time I joined a mentorship group, and the first time we had this kind of group activity, we were hanging out at a golf course. And back then, this is like back in 2018 when I joined the mentorship group, and we got the deal in 2019. And I brought my backpack, which is a lift backpack, because I was a software engineer at Lyft back then. And so I brought my laptop to the golf course because I was trying to figure out underwriting. But I figured out most of it is that there were so many nuances with underwriting. One example was one of the very experienced GPs told us that, hey, look at your increases in income. It's dramatic in the first year, and then dramatic on the second year, and then the third and fourth year, it's like not that just like so. But someone who's still looking at it will say that you are using faulty assumptions. But what you can do is that you can just increase the economic vacancy on the first and second year, and then decrease it on the third year. All things being equalize, and then your total return will look exactly the same. And then voila, this is not nothing, but it's exactly the same underwriting. You just tweak some numbers to make it look smoother. I was like, is this cheating on the LPs here? But there's so many nuances for it. And so that's that. That's the first thing I learned. And the second is underwriting is just a matter of collecting data, garbage in, garbage out. And there's data collection is very, very time consuming. Okay. So let me give a little bit of intros on the problems of underwriting and what is this webinar for. Okay. So, well, first of all, the webinar is for newer GPs, but for those folks you may not understand certain terms like reversion, cap rate, don't worry about it. Maybe look it up. But if you're learning about multifamily, this is probably something you will hear about. It's also for experienced GPs, and toward the end, it's gonna get more and more advanced, and I think you'll like it a lot. This is ultimately also for real estate brokers and loan brokers, because they need to use this for underwriting and do a quick and dirty underwriting. Okay. I want to make it super interactive, so feel free to ask any questions in the chat. Happy to answer them. All right. Now, let's talk about traditional underwriting. So this is what a traditional underwriting looks like on a spreadsheet, right? You get the spreadsheet, and there are multiple spreadsheets. There's this spreadsheet, there is this spreadsheet, and then like it's just a lot of numbers that you plug in. The first thing you do is figure out what are the unit types and what's the current rent and what's the pro forma rent. Okay, and usually the current rent is just the median rent. And then the pro forma rent, usually they plug in the highest rent of that unit type, unless it's like, obviously this is wrong. And so you find the pro forma rent on the market. To find out the median rent of each unit type, first you have to do a pivot table. So example is that this is a rent roll. This is a typical rent roll. This is my property, so I don't mind showing it. This is a typical rent roll. Actually, this is not the real rent roll. This is like a simplified rent roll. The actual rent roll looks a lot more complicated than this. And so we take out the tenants' names and so on and so forth. So there's that. And so you use this, you do a pivot table, or you just like examine it. Okay, there's 0118, and then I'm gonna find all the rents, and then this is a type of this, and then you do some kind of heuristic. It's not scientific, and it's also very
Mike and Samantha made teeth, and they followed it up with something.
It's okay. All right. So then, so that's the rent parsing, right? Which is like 20 minutes gone just to that. So what a lot of people do is they outsource it. They have an analyst that dedicate that to someone else to do it. The second part is the expense parsing. Okay, expense parsing is that you take an actual T12, and so this is what a T12 looks like. Okay, and this is a typical T12. You have the variance, you have the adjusted total, and you have the income and the expenses, right? And you basically search for each one of the predefined categories, and then you copy and paste the numbers in, okay? But that's okay. That's not too bad, but it gets harder. For example, it's really hard. So this is where it gets a little bit advanced. Sometimes you want to detect trends within the expense. For example, now that we are doing a lot more, like we've been doing a lot of underwriting, for example, you can notice that if the background checks, the fees for the background check have decreased in the last 6 months, you can be sure they are just trying to get tenants in to increase the physical occupancy. So you can be sure when you take over that property, there's a lot of bad debt. So there are some certain things that you don't know, and you have to look for it. And you just stare at a T12 every day and just like, oh, okay, this is what happened. You can also notice that if the marketing budget increased at the last few months of the sale, you can imagine that the market, the occupancy is not organic. So there's that. So it's kind of hard to find trends. When you are putting in the pro formas, so here is the pro forma on a typical underwriting. Let me go into here and then go to expenses. These pro formas, you can see that the property tax has a very special thing. Property tax is the same. However, there is like first year, second year, and third year increase. And so the way we model this is that expenses is equal to, this is back in the day, 2% plus this property tax increase divided by J15. And then the third year is QA divided by L15. So you do some special treatment with the property tax because in Texas, this is a big part. Similarly, insurance increase at a different rate than normal expenses. So then you encounter this spreadsheet that is limited in its ability, and you have to change some formulas and so on and so forth. And so expense increases is not that easy to model. Furthermore, other income increases is also not that easy to model. For example, in our case, we have to say 2%, which is the normal income increase, plus your business plan, which results in some other income increase, such as cable and water and so on and so forth. And so there's that. And then going forward, you can normalize it. Now, there are more complicated spreadsheets nowadays, and it just takes a long time to learn that spreadsheet, and no spreadsheet can ever parse a rent roll and a T12 for you, just period, right? And so there's some. Finally, sensitivity analysis. This is our webinar, and the sensitivity analysis goes something like this. If we assume 6% cash and cash and 86% total return, but if we assume a different rent growth and a different reversion cap rate, we'll have different results. And then if we combine those two assumptions, we'll have even a higher upside. So it's kind of like testing how high can this total returns go? And then also kind of the stress test, how low can it go in terms of occupancy, physical occupancy? When we did this 4 years ago, what we did was we go into the spreadsheet and we basically change these things to like, oh, instead of 4%, we're gonna change it to like 4%, 4%, and 4%. And then we jot down this total return, we put it on another spreadsheet, and then we create a graph out of it. So it's like very manual because spreadsheet at the end of the day is not a true simulation program, right? You can code it, but it will be really hard to code it against the spreadsheet. And then finally, whenever you get an Excel sheet, you are building on top of someone's genius. However, it's really hard to change anything on that spreadsheet because they make certain assumptions. It's not the most well-designed code. And so anything you change becomes like you're creating your own spreadsheet. When people create their own spreadsheet, what happens is that they're so sucked into that spreadsheet and you're spending a lot of time creating Excel formulas and creating things as opposed to like spending time underwriting, okay? So typical underwriting takes about an hour to even just like do a reasonable job. Unless you are like my business partner, most people don't enjoy that. He does, so there's that. So what we want to do is imagine doing all of that in like 5 minutes, okay? So I will show you our underwriting in maybe just quickly, and then I'll go into the details. But before that, maybe any questions or any comments, feel free to put it in the chat room. So far, so good. Everyone understand kind of the pain points on underwriting?
Yes.
Yeah? All
Yes.
right, great. Yeah, cool. All right, so here is cash flow portal underwriting, which is trying to address some of these nuances. Okay, so to get started, and we can start the clock. So I'm gonna type in North Haven Terrace. It's a $32 million purchase price, hold it for 5 years, built in 1968, and then it's 2280 Journey. I think, yeah, that's it. That's my address. You can keep that address also optional. So at this point, I have this underwriting. Let me make it a little bit bigger so everyone can see. Okay, so the first thing I want to do is I want to upload my rent roll. Okay, and so I don't have a unit mix. Let me make it a little bit smaller. Actually, I don't have income. I don't have expenses. Everything right now is empty. Right, this is an empty underwriting. So I'm gonna upload my rent roll. So I'm gonna use AI or format it. Use AI. Download the sample one because I can use sample one. You should upload your own rent roll. Just to be clear, we parse right now 99% of the rent rolls out there. Upload it. Cool. Upload it. All the units are in. All the insights are in. Okay. All the leases expiring are in. So we know when the leases are expiring. To see any drop. Rent statistics. All the units where they are vacant or status is in. If I go to T12, and expenses. Expenses are still not in. Income is still not in because I don't have my T12. So I'm going to upload my T12. And then I download this sample T12, drag and drop this T12. And this is the T12 I was using before. And then voila, I'm actually done with my underwriting. Because at this point, I know that on the first pass, my IRR is 22%. All my expenses are calculated by ChatGPT. And then I can look at what they are. I can look at the projection. It's using a 3% growth. You can change it if you want to. And then here, I can see the summary, all of this. And then here is a sample return on $100,000 investment. Maybe the only thing I want to change is that of a 5% cap rate, I'm going to do a 6.5% cap rate, which will definitely make a 13% IRR and a 76%, which sounds reasonable. There's a sensitivity analysis really quickly, and then I can export this as a spreadsheet with your logo on it to the LPs. So in essence, we basically could do the underwriting in basically uploading your rent roll and T12. So that's the very, very fast version. This is how fast you can do it. You can do it even faster by just sending your rent roll and a T12 to an email, and then we'll automatically parse it for you. So you can build this library of all the deals that come across your desk. I will spend the next 30 minutes going through each of the nuances of the underwriting, but basically this is what a normal workflow will look like, which is to reduce this 1 hour of underwriting down to literally just uploading 2 things and a unit mix, a rent roll, and a T12. Okay. So let me kind of come to the part here, and so what will people like to go over more is that the nuances of these different parts, or you want to talk about kind of like how you might want to use underwriting. How would this speed up your time? I think some of you can actually unmute yourself if you want to speak, or you can just put the thing in the chat room.
Hello, Perry. This is
Hi.
Edna.
Yeah.
I
Edna.
just have a question with regards to uploading the Excel spreadsheet, the rent roll. Does it need to be a specific format? Because the formats that the brokers are giving us are like different formats, right?
Yeah, very good question. All right, so sounds like folks want to go into kind of the specific parts. So let's break down each one of them, okay? All right, cool. So let's talk about rent roll upload, and then we can go over each one of those tabs. On the rent roll upload, you can click on, let's say I go into rent roll, and then I'm going to upload a rent roll. There are 2 ways to upload the rent roll. One is you use AI parsing, and one is formatted. The AI parsing right now takes the rent rolls from Resman, Yardi, RealPage, Appfolio, and Entrada, and most of those top 5 or 6 companies. So that's but they have to right now have to be in Excel sheet. Currently, it doesn't work on PDF. We are concurrently developing a model to parse PDFs. And to the people, they say, well, I have a lot of PDFs, rent rolls. And to that, I responded, is that really true? Or the broker just doesn't want to show you the Excel sheet yet? Because when you buy maybe 50, 60 units plus, they usually hire a professional property management company, and by definition, they use a software, and with that software, you can export a Excel. And so sometimes if you just ask kindly, do you have the Excel? They will usually give it to you, okay? Obviously, in order for us to solve the long tail, we have to parse PDF, but that is coming up. So right now, it's only Excel. It's made all the major property management softwares. And, you know, every day on our Slack channel, we have hundreds of notifications of successfully parsing rent rolls right now. So that's actually working really well, okay? And so there's that. Now, if you don't want to use the AI one and you want the formatted template, and what that is, you download this thing, and then actually I'm gonna go here, I'm gonna just copy, move this one here, and in that world, basically you take whatever they have. Sometimes you can ask ChatGPT to parse the PDF, and then they will give you a table, and then you just like copy all the columns in here. If you do it this way, we will for sure be able to parse it, right? I mean, that's just do some manual work. Now you can say, well, why do I want to do this work instead of like just looking at the numbers and then plug it in? It's because it's really hard to model kind of when the leases end if you do it any other way. You need a rent roll. Okay, so there are two ways there. Yeah, William, go ahead.
Yeah, I was gonna wait to answer this. Are you done answering this?
Yeah.
Okay, sweet, sweet, awesome. Yeah, this is great. Can we go back to cash flow portal?
Yeah.
Yeah, I'm wondering, this is awesome. It saves you a lot of time. And as a new investor, like, let's say I did 300 underwritings. Is there any limitations to using this software? Like 300 is a lot of computation, right? Or is it cheap?
Yeah, good question. Right now the pricing is subscription, so it's one set price per seat, and you can have unlimited underwritings. Currently that's the way because we didn't spend that much time engineering resource on like different pricing models. But in the future, yes, maybe we should be able to tier the people who do a lot of underwriting, who maybe people do one underwriting a year, as example.
Okay. Okay, I see. And then if I did 300 underwritings and let's say I bought 5 deals,
Yeah.
and then let's just say I label those 5 deals as really good deals because I bought them right. Then
Yeah.
at that point, is it able to train like, my underwriting kind of like behavior or, to say like, oh, the sentiment is like, oh, this is above average deal, good deal, bad deal, etc.
Right. Good question. The answer is that is on my mind. We will eventually get to it. There's a lot of plumbing. The best analogy I will make today is imagine underwriting is taking a GRE. Right now, our software is a calculator. Our software is not ChatGPT. That's the way to imagine it. Like if you take ChatGPT to a GRE exam, you're gonna like get every question right. But ours is more of a calculator that makes it a little bit easier. The art is still on your end to figure out if this is a good deal or not. So far, we don't know the answer, and it's not until we have so much data to train on that we can figure out. But that's maybe like, I would say 18 months down the line. Yeah, good question.
Cool. Awesome. I like it. Thanks.
Yeah, go ahead, Adelia.
Yeah, hi Perry, thanks. I have a question. I know you from Warriors, etc., so I trust you and all that stuff. My question comes from the fact that can you get so that it doesn't become just a black box where you don't know how everything is being calculated, and if you want to manipulate things in a different way, can you download the underwriting? Let's say this passes my first screen or whatever it is that I want. Can I actually get a spreadsheet out of it?
Yeah, good question. So that's a great question. The question about black box and so on and so forth. What's the best way to do that? You can export this as a spreadsheet here. Export this underwriting. I'm just gonna like move it over here. So this is the underwriting spreadsheet, and so you do have all the tabs. So you have the entire tab over here. So let me just open it here. Wait for it. So there's the closing cost expenditure. You can fill this out, and once you fill this out, this is all calculated. As of now, we are not adding the formulas onto that spreadsheet. It's just incredibly difficult to add the formula. And then we also believe by adding the formulas, it's gonna be like a proprietary thing as well. And so there's a trade-off between black box, and then there's a trade-off of like, well, you basically sign up and get a free underwriting spreadsheet out of it. I don't know the answer. I believe that we should add the formula eventually. It's just a matter of time. But like everyone is using the same software. So if someone is doing underwriting, what happens is that someone is doing it on their own, Lone Star and Spread Sunrock and Stella underwriting, and then they're gonna compare the results against us. And if they don't match, they will file a bug. It's like, yeah, what's going on here? And so far it's been good. Yeah. Now, what we could do, though, to be clear, is that that's a good question. We should have sky is the limit on what we can build. So for example, let's say if I go to modeling and I come in here, and then this is the reversion cap rate 6.5, and then these are the prices results. There's no reason we shouldn't put some kind of info icon next to it on like how this formula is calculated, and then link to some tutorials and so on. That's a fair point. But as of now, I think what I'm trying to say is maybe do away with the old school of underwriting. And we never question if TurboTax calculates things correctly, and you want them to print out a text form like, I want to know everything. Maybe do away. Eventually, at some point, people just don't question it, and so I'm on that camp, if that makes sense. Yeah.
Okay. Okay.
Mhm.
No, it's just that sometimes you want to be able to show something physical to the more sophisticated investor than just something that you spit out. But anyway, okay.
Yeah.
I had another question.
Yeah.
No, that's fine. I forgot it, but I'll get back to you.
Okay,
Let somebody
sure.
else.
Yeah. Mhm. Yeah, that's a great question about the most sophisticated investors. What we personally want is the following. And so one of the other problems with the current underwriting is that when you share the spreadsheet, most people also couldn't share the entirety. I believe most people was download the PDF as well. That's because all the returns are contingent upon the GP tab. How much GP makes. And so if you hide it, a sophisticated investor will make it appear anyway. So in order to share, you actually impossible to share it. And so to address that problem in the future, you have an underwriting. And what you can do is that you can bring it as part of your deal. And then you can share a version of this where you can allow the LP to change any of the numbers should you want to. And the LP will trust that this is a reputable company that's doing the math in the back end, that this calculation is that this is how it's calculated. And this is the algorithm, as opposed to, because on a spreadsheet, it's also very difficult to share that.
Yeah, so the goal for you here is for this to be the complete full-on underwriting versus the first run of an underwriting, and then you do something more intense. Like, what's the goal of the? Yeah.
The goal is that this will become a self-sufficient, comprehensive underwriting model that you can run end to end. Which includes the summary, which includes sensitivity analysis, which you can populate rank comps, and then you will do the full underwriting. I will explain in a second how you might be able to use this if you still have your own spreadsheet and you only using it to parse things. That also works. Yeah. Mm-hmm.
Okay. All right.
Yeah.
Thank you.
Yeah. Go ahead. Mm-hmm. Yeah. Go ahead. Ola Inka.
Hi, thanks, Perry. So my question is, you did say this underwriting is based on AI. So
Yeah.
is it able to pull, for example, like tax information, like everything from 50 states in United States?
That's right. That's right. Good question. Yeah. So there's a great question. So like tax information, rank comps, crime rates, insurance rate, etc., etc. And the answer is right now, it doesn't. In I will say 6 to 12 months, it should. Yeah, that's right. Right now it doesn't. Right now we're just a calculator. That makes parsing easy because that's definitive information. And then there's the exploratory information, which is like grab the 1 mile radius comps, integrated solution. Then there is the analytics. This is your behavior. You tend to underwrite this kind of expense increase and so on. So it can learn from you. But right now it's just a calculator. Correct. Yeah. That's I will say I have underwritten quite a bit myself, and I have used both underwriting models. And once you start getting a hang of it, what happens is the habit becomes the following. People love to put everything that comes across their desk onto the software. and then they will put the rent comps around it and so on and so forth. It almost builds this library of all the underwritings they have. And then they're like, I like this deal, I like this deal, I'm gonna make an offer on this deal. And they have been requesting us of how do I build it into a pipeline where like I'm gonna make an LOI on this deal, and how can I make an LOI directly from the software. That is what our customers have seen of like becomes a power workflow, where it's like driving their day-to-day activities. But and we tell them so far it doesn't. You still have to go to the county assessor of website and look up the rent roll, the insurance increase, and then plug it in yourself.
Yeah.
Yeah.
Thank you so much, Perry.
Yeah. Eventually it will. Okay, great. All right, so I want to go through some. I'll get to the next question in a bit. Here, so someone say, the goal is to be a comprehensive underwriting software. However, some people, let's say, there are some very interesting scenarios that over time we will support them, but in the meantime, if we don't support them, here's what you do. So for example, one of the examples is, say you want to do a refinance on the 3rd year. You want to see that model. Again, that's the advanced calculation. What you can do is you use our software to parse the rent roll, and you see this thing called copy unit type to clipboard. I'm going to copy it, and then I'm just going to go to my own underwriting, and then I'm going to paste like this. Or actually, not paste it this way. Paste it here. And then I'm going to come here, paste the square footage. Where's my square footage? That's my square footage. And then I'm going to come in here and then copy the number of units, and then come in here and then copy the rent, and then just paste it like this. So you could use it literally only to just parse the rent rolls. And then you proceed with your underwriting. Then the next thing you do is, once we parse the expenses, you come into here, and then you go to the expenses that we parse from the T12. You rearrange this, okay, in a certain format, and then you just copy this whole column and then put it into your spreadsheet. You will remember which order you put it in, so the next time it will match against your underwriting software, underwriting spreadsheet. So yes, you can use it both ways, because we know right now it may not be as powerful as your own underwriting spreadsheet, and you're just getting used to your text editor. And when you see it like an IntelliJ, developer tool, you just like, oh, this is too much for me. Go for it. Use your text editor if that's why you're more comfortable. But we hope that eventually you're gonna find that this is actually much easier. Okay, so that you can use it both ways. Derek, question.
Oh, I'm not sure if it's a question, maybe, but essentially I'm trying to understand what will be the typical user based on the initial design. Because like, say someone who's entirely new, understanding the metrics and the numbers and how they work, if it's for a new user, and then I don't know if you'll have tooltips to understand what these numbers are, and then a 1 to +1 understanding on the spectrum of when these numbers are given, what is considered good or bad for any market area in general. And I think even just looking at a lot of these from someone that's like, say if I'm new, do you have like a training tutorial that walks them through what these metrics means and even some of the terminology and things like that? Or just more of like someone who's doing it and they're looking for an efficient way of like streamlining it?
Yeah, great question. So to learn how to underwrite, there are mentorship groups that you can join. If you're in the Bay Area, check out Tony Lynn's. Otherwise, you can check out online resources or join. There is other training materials that can teach you how to underwrite. I often say our software is not exactly in the business of educating until we succeeded in the expert stuff, and then we'll move into kind of the education, like teaching people how to use certain things. We are more in the business of like keep developing features that the people who are in the game know how to do. So for example, investor portal, nobody really uses an investor portal until you have a deal, and so we don't really teach you how to get a multifamily. And then when you have the LOI accepted, we say congratulations. You think you finished, you're just getting started. So welcome to our world. This is where you get started. And so same thing with underwriting. You basically have to have a basic understanding first. Now, I think that there are a lot of people who know how to underwrite, and you can connect with people in SEER to on that end. But I will say a lot of this is we will create a one-pager and a blog article on like the introduction to underwriting, like what's reversion cap rate, all that stuff. It's not that difficult. You can pick it up in like probably a week or so. Yeah, for sure. Yeah.
Are you also going to be publishing a roadmap for like different features
yeah,
and like, things that are coming out so that people can also figure it out over time when it's going to be applicable to them, or they can even maybe you can get feedback like which one, get some validation from the public, like what features are most desired.
Absolutely. There is a lot to build. And we have spent 2 engineers now full time on it. And technically 2.5 engineers. One went to UW, represent Thailand in International Math Olympia. One person goes to CMU, like a 3.97 GPA. Both are like math geniuses, like perfect scores on like, like AMC and so on. So both are really, really good math people. But even with that, it just took us forever to just like understand the different T12s, different rent rolls. As of like 3 weeks ago, there was like all kinds of issues with like not parsing the T12 and so on. And then we fixed the model, we make it better. And then as time goes on, it learns from like, oh, I cannot parse this. Now I'm gonna figure out how to parse it. The second person uploading the same category will be able to parse it. And so it is one of those things that I personally have a lot of fun, like of creating the product specs, because it's a very intellectual kind of a product that we are building. Yeah.
Cool.
And this is one of yeah. So there's that.
Are you using
Okay.
OCR as a part of your roadmap in the future, so you can just consume any document? You can scan
Yes.
anything.
Yes,
Okay.
it is. And I will go over really quickly what's the roadmap as well. Okay. So let me move on, go through a few more tabs before I take more questions. Okay. All right, cool. So that's the unit mix. As you can see, this is what the unit mix. By the way, you can also add a unit mix if you want to. So this is also like manual work. And then you can see the pie chart of the units and the rent statistics. Okay. The rent roll is obviously parsed. My favorite chart is this leases end. So to see any discrepancies, if you see a sharp increase in the leases end, that means, oh, well, be careful. Maybe that month is going to be a low occupancy month because maybe a lot of people are moving out that month and so on. Here is a chart. You can see the kind of the min and the max and so on and so forth. Okay, the rent and so on. Now, the closing cost, you can see I put it 1.65%. That's because we remembered that you put 1.65% on the previous deal. So we just assume that your closing cost is around 1.65. As you change it, it kind of learns from you. Now, if I don't want to do like 1.65, I actually want to put down like actual. So for example, origination fee is going to be a 1% of the loan amount. So I can do that as well as opposed to the total. The mortgage fee maybe is a $65,000 flat fee, and the PPN is a $15,000 flat fee. And then so there's that. And then so you can do a percentage of something, or you can do a percentage. Maybe there is more acquisition fee. There is some acquisition fee here. You can put an acquisition fee here and then prepay and so on. So maybe let's say contract and legal is 1% of the purchase sub price as an example. So you can save it this way. Okay, so the next time you can see a number, it would just be adding up those numbers. For the CapEx, you can do say, I'm gonna spend $8,000 and I'm gonna do 100 units of that. So that's 800,000. And then you can say, for the roof repairs, I'm gonna spend $350,000 on that roof repairs. And then maybe landscaping, maybe electrical panels is another 100,000. So you can do that. So go ahead and save it. So then you go into finance. The finance right now, I have $1.25 million of renovation. And right now, we just assume that all of it is unfinanced. But you can also say, well, you know what? $500,000 of that is finance. And then the other $750K is unfinanced. So you can do that as well. Okay. Scrolling down here, you have different loan amounts. So right now I put in a 65% LTV, 3 years of interest only, 30 year. This is kind of like the standards, but you can change it however you like. Specifically, you can change the loan amount, loan to cost. And sometimes, this is where it gets advanced, you may have assumable loans. And so you can do something like this one. So I'm going to add another loan. And so the first loan is only, say, 50%. And that's 3 years interest only. And they got a ridiculous like 2.95% interest rate on that one. So, but then you have to do another 25% supplemental loan. And then it's got like maybe only 1 years of interest only, 30 years, and then it's got a 7% interest rate. You can also do that as well. So you can have multiple loans supplemental as well. Okay. Now, so that's that. Now, here is the trick, right? If you click on, like, if you click into the finance and you click on this finance, I can make a copy of this finance. I can do a duplicate of this, okay? And then I can call this one something else. This is like O capital, loan quote. Okay, this is an O capital loan quote. This is my default. And then like I can just like make this thing the active. And then voila. This is why I say, like, once I use this, I can't go back. This is like, well, do you know what we did before? We make a copy of the thing and then we edit it. And then now that we have another loan stuff and we have to like copy and paste into it. And like, so every part of this is all just like pluggable. So this is a CapEx. We have multiple, you can make a copy of this CapEx, or maybe like call this one light renovation, right? Light renovation. So I make a copy of this. And so I have two scenarios. And I can easily make this the scenario as opposed to the other one the scenario, right? So all of this is pluggable. It becomes a system now. So that's why I'm really excited. So here's the T12. I upload it. And so I can upload more T12, by the way. And as you can see, the other income is all pre-populated, right? And so there's that. And then all this rental income is populated from the T12. So we all like parse it for you. And then the projection. So the projection here is very interesting. We assume a 3% rent increase right here, right? And so we also assume a 12% economic increase. But some people might say, I want to break it down into the physical occupancy, the loss to lease, the bad debt, and the concessions. And the physical occupancy is going to be 8%. And as soon as do 8%, this is just going to be the sum of all the stuff before it, and loss to lease maybe say 5%, and then this is like 1% and 1%. So I can also do that and add them up. So this will be 15%. So either you can set the total or you can be granular on it. So this is like very nice to look at, right? Other income, same thing. T12, T3, same thing. And so right now I set the other income to 3%. You can set it to 2% if you want to as well. Okay, so that's on the income side. Expenses, this is actually the trickiest part, which is we have to parse all the expenses. And it's utilities can consist of water, sewage, garbage, and we are able to know that water means utilities, and then sewer means utilities, and so on. In the future, you can add a category here, and you can say, I want water to be separate, and then we will just calculate for water on its own if you want that, okay, as well, okay? So that's that. The projections is very, very good. Why is it very good? Because one of the biggest problems that in our previous underwriting model is that you can only assume a total expense increase. Okay, but here you can say my normal expense increase is 3%, and my property tax is actually gonna increase 10%. My insurance is even worse, gonna increase 15%, and so on and so forth. And the weighted total expense increase is just 6.35. And so it's beautiful. It's just like you look at it as like, this is how I think about multifamily underwriting this. And then furthermore, same thing, you can make a copy of this expenses, and then you can call it, what do you call it? You call it Fairmount Property Management Company quote. And then you call it the other one, another quote. So you can have multiple quotes, plug and check. And then once you have multiple quotes, we haven't implemented this part, but there's no reason you can just like ask the system, which one of those combinations will work the best? Like, what do I need to tell the loan broker to do something? Like reduce the interest rate, or like do some prepayment, like do a new maintenance, and so on. So that's where the insights will come from. right? So that's why, you know, it's really, really cool. So let me pause there. I know people may have more questions. So Adelia, go ahead with your question.
Wow, that was awesome, because actually my question was going to be on loan scenarios, but I like the fact that you could copy different scenarios under your CapEx, under your income, and under your expenses, under your loans. You could add loans. My question is, I guess it wasn't the original question, but my question now is there a way you can make various scenarios within each section, within the CapEx, within the finance, is there a way to do a global copy of what you're doing and pick different things?
Is there a
Do you
way
know what
to
I'm
do
saying?
a global copy of and pick different things? Maybe elaborate, like as an
Okay.
example.
Let's say I have a version that I'm going to do an assumption with a supplemental, whatever. And then I'll have another and then another version that will be just a brand new loan with maybe some CapEx mezz or whatever it is. But is there a way that I could have like a full, like the full summary under different versions? Do you know what I'm trying to say?
I see what you're saying. So what you are saying, if I phrase it correctly, obviously we're gonna make it better using product. You are saying, can I have a global template that I know for each one of them? I want to see what is a straight out loan. I want to see what a supplemental will give me. I want to see what a refinance in 3 years will give me. Right now, I have to run that scenario 3 times, make different copies of everything. But what if that is my global template? And every time when I underwrite, I use the same 3 finance scenarios, and then have them just pick the best one for me. Yes,
Right.
and I maybe I keep stressing this. You can only do that in a software. You cannot do that in 10 years with a spreadsheet unless you make your spreadsheet super, super good. Absolutely, because once we build the plumbing, that's just like trivially easy, right? It's so yeah,
Yeah,
compare
because then
this
it's
one,
just
this one.
you running the numbers the way it's kind of like a sensitivity
Right.
analysis almost.
Yeah. So talking of sensitivity analysis, you go in here again. The sensitivity gets generated like kind of right away. Because we just drag down and drop up. Yeah. Okay. Very good. I like that. I like that approach. With all things, this will come in a few months. Because we're still working through a lot of the plumbing. Let me also talk about a couple more tabs, and I'll get back to it.
Thank you.
All right, so moving on the modeling. So modeling is very, this is how you understand it. You have the income, you have the expenses, you have the summary, you have the yield and the cost of sale, and so on. And then we'll remember some of the numbers you use on your next underwriting and so on. And by the way, you have like, we are assuming this is a sell on the, reversion cap rate is calculated on the 6 year and so on. This just that. But you can manage the underwriting and you can change this whole period to 7 years, and it will change it to 7 years as well. Okay, so that works. GP/LP return. Right now it's an 80-20 split with a 2% asset management fee. You can change it to 70-30 split if you want to, and then all the numbers will change. We have not add the ability to add like a preferred return. Not yet. And the good news is that the whole idea about a preferred return, it exists on Cashflow Portal. So we just have to port that logic over. So it's not that hard, but it will come out in the next like couple months. The other thing we should also do is some of you might be using a fund of fund, and then the fund of fund manager wants to know what's my return, right? And so in the future, you can also add like a fund of fund tab of like, here's your return if you want to be a fund of fund manager for us. So, your split is 90-10, and you're going to invest into our class C, which has the highest minimum investment. And this is what you're going to get. Okay. So that's cool. On the GP/LP return, under the projected return, you can see how much class A gonna get, class B gonna get, net sale proceeds, all the class A's, their returns, class B, their returns. And so, okay, the GPs are gonna make about $3.5 million on this transaction, which sounds about right, like that. Okay, and then they split among their GPs. Rent comps, that's where you can build your library. And so you can add things to it and photos and so on to it to compare the comps. Once you add the comps, they will also show up on your analysis. And so this is a PDF that you can just download, and then you can give it to your LPs right there. So for example, if I come in here, I go to here, I copy paste this, and so yeah, you can just send it to your LPs this way. And so that's very, very useful because the LPs don't really want to see everything. They just want to see like if I invest 100K, what's my return? So like for example, here, net of all fees. This is LP return. This is a sample return. So let me zoom in here. Year 0, 8,000, 8,000, 8,000, 7,000, and so on and so forth. And then if I refi or sell, and then I get an 84% return, 100K turning into 184,000. For someone who has underwritten, I don't know if I should get some corroboration. For someone who have underwritten, just do tell me this is better. All right. If this is not better, I don't know what is better. Yeah, because the typical underwriting process is like you do all of this manually. Okay. And then finally the sensitivity analysis. Okay. I'm gonna open up for more questions. So Mai and Ola Ikam, go ahead. Mai. Yeah.
Okay. Yeah, so on the upload file,
Yeah.
the template, so you have the T12, which is the profit and loss,
Yeah.
and you have the chart of accounts or the name of accounts. Do you have to standardize those? Because if you get it from Yardi or depending on the owners or accountant, it could, it could be different. The account
Yes.
name could be different. So in the template, do you have to standardize?
Nope. On the T12 right now, you don't have to standardize, and you can upload a lot of T12s. Now, there are two parts to it. The T12 is we're actually spending the most of our time on T12 because T12 are all kinds of stuff, right? What do you call anything? So currently on the T12, I'll write down the following notes. So we do parse Yardi, Resman, and Afolio, Entrada, RealPage, and then there's like one more that's like very big. So we do parse them. And sometimes you can add a variance column, null variance. Sometimes you will have. The most important thing is don't change anything on that T12. We need the raw file. Because as soon as you change something, we don't actually know what's happening. And so that's that. Now, success rate is about 90%. It used to be like 50%, like 3 months ago. So 90% now, which is really good. And then our commitment is that if we cannot parse it, we will manually parse it on your behalf, and we will improve our model. Okay. And the way it works, by the way, is this is actually really funny. So if you go to expenses, I parse the T12. If we could not parse something, we will classify it as other. So in your T12, when you upload it, some of you might notice that the other is really high. Okay. Don't worry about it. As time goes on, there will be a button next to the other and say, hey, these are the 7 things that we don't know how to parse. And but then ChatGPT learns now how to parse these categories now. Click on the button again. And what it will do, it will parse those remaining things and then add them to the rest of these columns. Does that make sense? So there will come, so there are 2 things going on. There is the we can parse, and if we don't parse, we will make sure that in 40 hours we'll parse for you. Alternatively, you can classify anything, any expense to any predefined expense. Should you want to, you can classify any expense to any. But that's a manual process. But the goal is that we will learn from you as well, and then we will improve our model that way. Talking of which, I'm gonna take a slight tangent. So here is like a sample thing here. So this is just my test account. Let me go to KPIs. In Cash Flow Portal, there's this concept of key performance indicators, which allow you to put in any kind of metric on a month-by-month basis. And then what it does is that the email will use those KPIs to generate the charts and write your monthly updates on your behalf. That's one of the features that we have. And then in those, the question is, how do I enter the KPIs? Right now, our team, our investor relations person is putting the KPIs manually, one by one, just copy and paste. But there's no reason that one cannot upload a T12 and say, here are all the KPIs I have predefined. ChatGPT, can you find out what the number should look like for this month? So the same technology is used in both sides, which is given the KPI, given the T12, and given a date range, what is the total of that KPI or that predefined expense in your T12? That's what we're getting at. And so we're actually spending the majority of our time in parsing T12s. And until we can parse the T12 reliably well and really, really good, we actually did not end up working on much of like the comprehensive simulations and so on. But yeah, T12 is gonna be super interesting. I hope that answered your question.
Yes, thank you.
Yeah. So our commitment right now is if we cannot parse it, we'll parse it manually because we need to improve. We need to keep improving the model. Okay. Yeah. Go ahead, Ola.
Okay. So my question is, you touched briefly on the fund of funds.
Yeah.
I'm just wondering that since this is still in the development stage, if you could include the property level expenses parsing with the fund level expenses so that way somebody coming in as a fund of fund will be able to use that and just generate their GP split inside the fund of fund.
Yeah. Passing into fund of fund expenses. So fund of fund folks don't have to use a spreadsheet to calculate their their return their returns. Yeah. Okay. To calculate don't have to use their available cash to their LPs, right? To their LPs. Yeah.
Perfect.
Yeah, thank you. That is both on the underwriting side and also technically that's also on the portal side, right? Portal,
right.
It would be nice to have that calculator. Thank you for that feedback. I heard that feedback, and definitely something we actually want to work on. Yeah, fair enough. Okay. All right, cool. Let's talk about. All right, let's. I know we are at close to our time. I want to talk about kind of a couple things. What is the future? What's the roadmap? So what things can we not do? There are a lot of things we cannot do, and so I'll just tell you what we cannot do. What we cannot do, and are on the roadmap. So one of the things is that we cannot do refinance in 3 years yet. That's in 2 months. Let's just call it Q3 2024. So like maybe you want an example of like I want to refinance in 3 years. There's the preferred return in waterfalls, and that's also Q3 of 2024. There's making an LY directly on the portal. That's Q3 of 2024. And then there's the crime data, property tax data, and that is Q4 of 2024 or Q1 of 2025. Okay, so there's that. There is this idea of like moving this deal into a opportunity, CRM, like a pipeline, opportunity pipeline. That's Q3 of 2024 in the next 2 weeks, actually. So there's that. Add your documents. So basically you have lender documents, you have like T12s and so on, and then a bunch of like assessor like folders, documents and folders. That is Q3 of 2024. There's stakeholders like your brokers, your lenders, their phone numbers. So like integration with CRM. That's Q4 of 2024. Maybe even Q3 of 2024. And then there is like the simulation of different scenarios. That is Q4 of 2024. And then there is the idea of like ChatGPT. How can you make this deal work? That is a Q2 of 2025 of like, given what I've told you, what can I shed to make this deal work? And they will say, well, if you increase your interest rate, if you increase your loan proceeds by X, if you decrease your a bad debt by Y, if you ask for a like a $500,000 concession, or if you do a little bit of a prepayment, or you know what, in this market, water stuff is pretty popular. Or because it's all bills paid, I see that you have a really high water bill and you don't have enough ROBs. Why don't you just start doing ROBs? Like those things will come. But I don't want, just to be clear, I don't want to make it sound like until that comes, this is not better than the status quo. It is actually already better than the status quo. So that's what's happening. There might be other ideas in which we are working on. You know, there are always bug fixes and so on. So that's what's happening in the next few weeks. All right, cool. The last thing I will mention is like kind of like why is this important? There are 3 dimensions. I have seen our customers use this in 3 ways. Why they're using it. One is basically, you know, how much time they are spending. A typical underwriting is 1 hour of your time, and so 1 hour, if you're making say 150,000 a year, 1 hour is 75,000 per hour. It's like 2,000 hours in a year. That's your working hours. So how much is your time? So if we charge $79 per month as a subscription, okay? So if we can help you save 1 hour a month, then technically it's already on par. So if you're doing at least 1 underwriting a month, then technically it's worth it. So that's part 1. The second one is actually really interesting, is once we can parse certain things and can give you insights, hopefully we can prevent you spending more hours on an offer of a bad deal that was never going to work out, such as the fact that they are like some numbers are artificial and so on. Maybe we can detect that. The last one is priceless. And the last thing that's priceless is making an offer on a great deal, but because the task of underwriting is so daunting, you didn't get to it, and then you just forgot about it, and then it was taken. So I will say, you know, if we make it so easy to underwrite, you will underwrite more deals, and as a chance, you can filter out the bad from the good, and then you don't miss out on a great deal. Okay. There is no reason that we couldn't in the future integrate with the commercial brokers, and then they will put the deals on Cashflow Portal, and then you can just download it and then underwrite it and then save it and then using your. So sky is the limit on what we can create. This is we've been working on it for a year. Lots of research and development going into it, and we are super excited to unveil this to everyone. Yeah. And then I know we are way over, so I want to be respectful of everyone's time. So maybe if you want to know more about this, just go to 1 second. Let me just go to here. I'm just gonna put up my calendar here. No, not this one. Maybe go to there is a demo link. So you can take a screenshot of this one. And then you can also schedule a call. Either way it works. Here's a link to schedule underwriting, and you folks can email me here. Okay. Very open to feedback. This is the early stages. You know, Cashflow Portal have been around since 2020. It's a 4 year. This is a 1 year product. And we are constantly making updates to it. Yeah. All right. Thank you for your time.
Oh, and I see that there's one more. Do you want to take that last question? I see someone raise their hand.
Yeah, sure. Go ahead, Ola, go ahead. Yeah, maybe last question.
Yes, Perry. It's not so much of a question. It's just to say, good job, and I really enjoyed what you've been doing in this space, and and looking at it from the point of an investor yourself, and also an engineer. This is a great job. One more thing that I was going to ask that you could put in this scenario is also seller financing in one of those areas. So that way, you know, if people want to do seller financing, they can do a different scenario with seller financing. And I think this is a it will make it a very, very robust software that is going to be probably #1 in real estate multifamily underwriting.
Thank you. Remember about seller financing. Understood. Some people right now just use loan one to denote seller financing, because it's a type of loan as an example, right? But that's a very good point there. Yeah. Yeah, very good. Talking of which, yeah, thank you so much for the compliment. The last thing I forgot to mention is Palace Investing, which is a product for LPs. We eventually are going to port underwriting over there. And so what it does is that it takes one more input, and that input is the webinar deck. If we can parse PDF, we can parse webinar decks. Upload your webinar deck, we create the underwriting model for you. Sometimes we're not able to know the rent roll and but we probably can parse the unit mix and so on. And so it's a whole different beast. It might take us another half a year to a year on that. But yeah, so some engineers, LPs actually want to look at the underwriting, and they can look at it from the other side as well. There are two different unrelated products. So that is something the LPs can use as well. Eventually, it's not there yet. Okay, all right. I think that's pretty much it. Thanks everyone for. I understand everyone is super technical and being in the business for so long. So appreciate the advanced questions, and I hope that this is also an advanced call to kind of like really get into the heart of multifamily underwriting.
And I'm also glad that all of you guys stuck around for this, and because we have so many CRM members that I feel they're really interested in learning about syndications and more of the advanced things. And so if this was something that you guys like, we are going to have a Masir field trip in October, and actually with Perry, to go to Dallas, where we have a lot of our friends hold investments over there. And we're going to have a lot of topics like this, really learning about not just this. This is totally not even a sales pitch, or there's no syndicators involved, no capital raising. It's learning about these new tools and learning about what's going on in the industry. And we're also going to go check out the Old Capital conference as well. So if this is something you guys want to join, this is really designed by LPs for LPs so that we can learn this type of information. So I'm going to drop the link for you guys. It's on our website. You guys can take a look at that. And then we're also going to have at CERCON, end of the month, which is our annual conference, there's going to be a whole section dedicated to learning more about commercial real estate. So hopefully you guys will be around, and we'll see you guys in Southern California. If you guys want a copy of the notes, it's going to be here. I've also recorded this. So tomorrow, after I clean up the recording, I will post this up on YouTube and in Sarah so that you guys can go back to it and look at this. And go grab, actually, Harry, let's give them a link to Palace too, because I feel like we didn't really even talk much about Palace in here. There's two parts of Cash Flow Portal as an umbrella. Even though we have the underwriting software, that's not even the main thing that they do. They actually do more work on the syndication side, streamlining the paperwork for the onboarding for syndicators with their investor relations. But as an investor side, we actually use it as well to keep track of our own investments, and then also to network with other folks to find what other deals are available. And it's kind of like a Yelp for syndicators. So that would be the Palace. And so you guys go get in an account. It's free. Just go check it out and see what you guys like, and feel free to give us some feedback on it. All right. So without further ado, thank you everyone for your time. And any Bay Area folks, hopefully I'll get to see you guys this Saturday at Big Al's in Milpitas. See you guys in. Take care.
Everyone.
Bye,
Thanks.
everyone.